Been a while since I got on. These are 3 things you need for funding. We're talking about specifically on the business side. The personal side is pretty simple. You just need good credit. But on the business side, you have a couple of ways to get funding. Let me turn down my air because I know it's super loud. There's a couple of ways you can get funding even if you have bad credit. So let's talk about these fundamentals. Regardless of where you go for funding, whether it's a major bank, a fintech, a state program, a regional bank, a credit union, or international banking, they're going to be looking for 3 things. My bad, I didn't even prepare properly for this. It's been a while since I went live. I was looking, I was like, damn, it's been 2 weeks since I went live. I need a haircut and everything. But anyway, it's been 2 weeks. I was like, let me just hop on real quick on a road trip at the moment. These are 3 things that you need when you're going for funding. And I like to break this down for my clients because I need everyone to understand how this game really goes. If you have good credit, meaning you got a 680 plus, funding is fairly simple for you, right? You have good credit, you build with your bank, you submit your application, you're good. Now, what if you're rebuilding your credit, right? You're in the 400s, you're in the 500s, right? The low 6s. How can you still get access to funding as a business owner? I'm talking to my business owners right now. If you're not a business owner, this is probably going to sound like gooply-gop to you. Things before. So the 3 things I'm talking about, we call them the 3 C's of funding, or the 3 C's of fundability. The first one is credit. Now me, of course, my name, the Credit Protector, to me that's the easiest thing to get because you can build credit for free. You can build your personal credit for free. And on the business side, you can build business credit for about between $800 or $1,000 a month. The great thing about credit is you can both your personal credit and your business credit at the exact same time. And when your business credit is strong enough, you don't have to rely on your personal credit to get access to some funding, right? Now on the business side, it's going to look a little different. But let's say you have weak credit. As a business, what else can you do? Well, there's 2 other things that a lender is going to look at for your business. And I have to keep emphasizing that. They also are going to look at this on the real estate side. They're going to look at your cash flow, meaning how much money are you bringing in every single month. The other thing they're going to look at is the collateral. What do you have of value that they can use as a way to recoup their money, right? Like let's remember, these lenders are not giving us a grant. If you want a grant, that's from the government, or a private corporation or some nonprofit. That's a totally different process, right? With a grant, you're going to need a business plan. You're going to need to fill out an application. The application could take you 2-3 hours to fill out, right? You have to explain in detail how you impact your community and why this grant is important for you. But we're not talking about grants. I do not specialize in grants. I'm not a grant writer. I specialize in traditional funding and alternative funding. I help small business owners get access to funding by leveraging their personal and their business credit. So it's imperative that my clients understand they need one of these 3 things so that we can get them maximum funding. Can we do 0%, $250,000 at 0%? Absolutely, we can do that. Your credit profile needs to be strong. Your business revenue needs to be strong. Your business needs to be structured properly for us to do that, right? Now, if you don't have that, again, the next thing they're going to be looking at is your cash flow. How much money are you bringing in every month? The other thing is collateral. And here's the dope thing about collateral. A lot of things can qualify as collateral. You have your equipment can qualify as collateral. You have, if you have a vehicle under your business, that can qualify as collateral. If you have a home can qualify as collateral. This is one of the reasons that a home is considered one of the greatest ways of building wealth, because in a lot of instances, a home can act as collateral so that you can qualify for an SBA loan as a small business owner, right? SBA wants you to have some kind of collateral. They want you to have some kind of skin in the game. Anything government backed, they're going to want to see that. They're going to want to check the age of your business. They're going to want to check potential cash flow. They're going to want to see your projections. They're going to want to see that you have 20% to put down. They're going to want to have some form of collateral, right? When you're working with the government. That's just how they are. So they require a lot of paperwork. It's not as smooth as if you're going straight for, a no-doc loan, or really a no-doc or low-doc product, right? Those don't really exist for government funding. And the government is nosy. They want to see every damn thing. But I digress. Collateral. That's why it's important for those who are not homeowners to get a home or own something, right? If you already have a business and your business is cash flowing, you can use your business as collateral. This is a high level example of this. That's how one of the ways that Elon Musk purchased X, or Twitter, right? He actually leveraged the value of Tesla and used Tesla, an entire company, as collateral to buy Twitter and turn it into X. That's just one of the ways, right? Another way is accounts receivable. If you're a company that operates via invoices and you have outstanding invoices of a certain dollar amount, there are lenders that will basically give you a cash advance on those invoices, right? The world of business financing is vast. There's a lot of ways to finance your business, and there are a lot of customizable ways to fund your business, even with bad credit, right? There are state programs out here. There are state-backed lenders that will lend to you as a business owner with a credit score as low as a 600. Some go below a 600. I've seen, I think it's called AVA, under their SSBIC program, they go as low as a 575. Now, here's the thing. Everyone hops on here. We get excited about, oh, you can qualify for this or that with the low credit score. My business owners, this is for my business owners. This is not for regular folks who just work a 9 to 5. Unfortunately, you may not qualify for it. But for my business owners who have weak credit but you want funding, we have state programs, okay? I'm going to give y'all some. First, you want to check your state for CDFIs. That's Community Development Financial Institutions. These are banks and credit unions and other lenders in your area that offer financing to business owners with less than perfect credit. Okay? Now, here's some things to know when you're working with a CDFI. And this is to know as a business owner, if you have less than perfect credit, you're going to need paperwork. All right? That whole no doc, low doc world is not available if you don't have good credit. Like, I need y'all to understand that. And I want you to understand that, because when you're working with me, we're going to have to deal with that. We're going to have to get your docs in order. If you don't have accounting, we're going to have to get you some accounting. You're going to need to grab QuickBooks or something, right? I have accountants that I can connect you with that can help you get your books in order so that you can get funding. Okay? They're going to want to see tax returns. They're going to want your business to be established for 2 years or more. Because when we have less than perfect credit, this is where the other C's are coming in. The other C's come in. They're going to look at your cash flow. They want to see that profit and loss. They want to see those tax returns, because they need to see what type of revenue the business has. They want to see if the business is profitable, right? They want to see that. They want to see, oh, does this business have anything of value? Does this business have any assets? Does the owner have any assets that we can use so that we can feel more comfortable giving the money? This is how lenders think. I want us to start thinking like a lender. And it doesn't mean that if you don't have those things right now, that you'll never be fundable. It's just these are things that you have to get in place. That's it. These are just things that you have to work on. These are just things that you have to work on when you're going through the process. Now, the great thing is that CDFIs help you get your stuff in order. If you don't work with someone like me, then you can work with a CDFI, and part of their program and part of their whole reason for existence is helping business owners get access to the capital. That means if you need to get your shit in order, they're going to help you get your shit in order. Okay? And the easiest way to find this is you can just type in CDFI in my state, or just type in the actual name, the state that you're in. I'm in Maryland, DC, Virginia, so I have a list of every CDFI within my region. But it's super easy. You just Google that and the list will pop up for any state that you're in. Okay? So you're going to want to have full docs. You're going to want to have all your tax returns, your accounting, all that stuff. If you don't have it, you don't listen to this, say, oh, I don't have all my stuff, I'm not going to reach out to them. Still reach out. Still reach out to them. Ask them questions. Interview them. Ask them how long is the process. What type of loans do they have? Right? They have SBA loans. They have micro loans. They have 7A loans. They have 503 loans. Right? They have lines of credit. They have non-revolving lines of credit. They have equipment financing for you. Right? They have commercial real estate for you. Commercial real estate loans for you. Right? All these different type of financing opportunities exist for you. You just have to take the time to look for it. Now, that's the thing. Most business owners, you're busy, right? That's one of the reasons why our accounting and our books and stuff don't look that great, especially as a new business owner, because you're still trying to get the shit together. You're still trying to figure stuff out. You're still trying to make sure you're getting clients in and you're collecting on your invoices, right? And you're making sure that money is flowing into the door just so you can keep the doors open or keep the shop operating, put food on the table. So you may not have the time to call all 50 of the CDFIs that are currently in your state. That's why it's good to work with someone who already, one, has the connections, or two, can do the research and build those connections for you in your state and can make that introduction, right? And say, hey, this is Richard. This is Richard at Sandy Spring Bank. He's going to be your point of contact moving forward with this particular product. Richard, make sure you take care of my guy or my lady. That's the power of working with someone who already has those relationships established and that can build those relationships for you and can help navigate you through the application process. Because yes, you can get funding with bad credit. It's just not as easy as when you're doing it with good credit. Because good credit, they're gonna look at your credit score. Oh, okay, you got a 720. Okay, great. How much money you want? You got a 720, great. Your business is a year and a half and you got a 720, okay, great. Here's $20,000. But without a 720, okay, cool. You don't have a 720, great. How old is your business? 2 years old? Fantastic. What's your revenue? Okay, great. You got great revenue. What's your profits? Okay, great. Can you show us that? Can you prove to us that those are your numbers? Okay, great. You proved it to us. All right, let's go to closing. Okay, you got some money to put down on this? No money to put down on this? Okay, cool. You got some collateral? Okay, great. All right, what type of funding do you want? What do you want it for? I asked this question to a lot of entrepreneurs, especially recently, and sometimes they just don't know. They're just like, I just want some money. A lot of entrepreneurs right now, they're looking to consolidate debt. If you're looking to consolidate debt, there's a couple of ways you can do it. If your business is established, you have strong cash flow with your business, you can get a business line of credit that's large enough to cover your current debt, and you can pay off all of your debts with the business line of credit. Another way to do it is you can always get a debt consolidation loan on the personal side, especially if you have high credit card utilization. If you have high credit card utilization, there's a couple of debt consolidation loans that you can get. Now, I want to emphasize a loan, not a debt consolidation company. I do not work with debt consolidation companies. I don't recommend debt consolidation companies personally because they destroy your credit. If a person is in a position where they're like, I'm considering debt consolidation, either depending on the situation, it might be easier just to file a bankruptcy. But that's beside. If you're looking at debt consolidation, because happymoney.com is a company. It's a fintech that will give you up to $40,000 to consolidate and pay off your credit cards. Another company is called Meet Tally. Meet, like meeting, Meet Tally. TALLY.com. They give you a line of credit to pay off your credit cards. Now, if you're in a situation like me, I had high utilization, but I also had good credit. I was still over a 680, or you're still at a 700. You can do your own type of consolidation by using zero interest credit cards. You can apply for zero interest credit cards and then do a balance transfer from your current credit cards that are charging you 18, 22, 16% interest, and do a balance transfer over to those new zero interest credit cards. Typically, if you're going to apply for any type of or use a debt consolidation strategy, you want to do this before your utilization hits 50%. And I want to stress that because a lot of my entrepreneurs, they wait until they're maxed out, they're at 90%, they're at 70%, and now they're like, oh, I need debt consolidation. Do it before you hit 50%. Once you're over 50%, basically you're no longer lendable. No one is going to approve it at a decent interest rate, right? Once you're over 50%, we're at those subprime predatory lending. Now, I get it. You got to do what you got to do sometimes. If you already have your plan together and you know, hey, I'm doing this to pay off the debt. All I needed was this 10,000, this 12,000, right? This 15,000. Just know that that loan is going to have a crazy interest rate. You're going to be paying double digits on that loan, but it's temporary, right? Get that predatory loan, pay off your credit cards, right? Or pay it down as much as possible. Your utilization is going to go down below 50%. Your credit score is going to go back up, and that's going to put you back in position to go get more zero interest financing. Y'all with me? right. Now that's just one particular strategy. Going back to these 3 C's, right? So for everyone joining in, my name is Jamal. I'm a credit protector. I help small business owners get access to capital through banking, traditional banking, and also I'm partnered with various alternative lenders. I help my clients navigate the world of getting access to capital, whether it's zero interest financing or using a state program, credit unions, right? And I also build out custom funding strategies for my clients based on your exact location and based on what it is you want to use your funding for. Because these things are important. You have to know what type of funding you want, or at least what you want to use the funding for, because that drastically changes the strategy. For instance, real estate financing, totally different than any other financing. There's so many different ways to get money for real estate that is crazy. It's mind-boggling, right? I have access to hard money lenders for those that are interested in real estate. The great thing about hard money lenders, for those that have less than perfect credit, they don't really check your credit. Some are like, we don't care about the credit, even if you have a 600. They only care about the cash flow and the collateral. They only care about your ability to service the debt, meaning your ability to pay the debt off or pay it back, right? There are certain investor mortgages or investment mortgages that you can get with a 660. All they want to do is actually called a DSCR loan. And if you have about a 660, even a 650, some lenders go lower. But if you have that, you can get financing for your investment property as long as the monthly income is going to cover your monthly payment. Right? So it's a lot of opportunities out here. The important thing is working with someone that can help you navigate the world. I know there's a lot of people that's DIY. That's why I'm going live and sharing this, because those who are the DIY type, you're going to take the time to actually look up all the different things I just said. CDFI, a CDFI in your state, collateral, right? What is collateral? What are collateralized loans? How can I get funding with cash flow? How can I get funding with collateral? There are lenders that do this. All right. If you have a payment processor, this is great for anyone who accepts credit card payments, especially my e-com people, or if you're in the digital space, period, right? You make money online. You've probably already seen and you already know that Stripe, PayPal, Square, Novo Digital Bank, these banks will lend to you solely based on the amount of transactions that's coming through your payment processor. They don't check your credit. They only care about your relationship with them, right? So you have to be with them for at least 6 months. After 6 months, they begin evaluating your cash flow. Based on your cash flow, they're going to make you an offer. Once they make you the offer, bet to your account, and they're going to take their payments out of every transaction moving forward. They take about 20% of the transaction. Now, some people bitch and moan like, oh my God, they're taking 20% of my money. Yeah, but they already gave you 100% of their money, right? Or 100% of what they're willing to lend. So take the money, grow your business, and let them take their cut. Like, let's go. That's how business works, right? Think like a lender. Nobody is lending money out of the goodness of their heart. Lending money is a business. You're a business owner. You have a product or a service. A lender, their product is money. Did we get that? Does everybody understand that? When you're a lender, your product is money. That is the product. That is the service. So the only way they make money is by charging you interest. That's where their profits come from. They're not giving us money out of the goodness of their heart. They're giving us money because they want interest. They want to make a profit. So I hope we're all on the same page with that, right? Because it's too much fluff out here, and people thinking that, oh, I need the money so the bank will just give it to me. They're not. They're not going to just give it to you, y'all. We got to be in position. If you don't know how to get in position, then work with someone who can help you get in position, right? Don't sit there thinking that, oh, everyone keeps telling me I'm denied, I'll never be able to do this. You can do it. You can do it. You just have to be willing to do it. Is it going to be uncomfortable? Yes. Will it cost you time? Yes. Will it cost you some money? Absolutely. It'll cost money. Definitely. But I'd rather...
Speed trap ahead.
Damn speed traps. I'd rather invest the money so that I can become fundable and put myself in position where I can get access to capital at any given time that I need it, than continually be stuck in the same place a year later, 2 years later, still saying how I'm not lendable or the banks are evil, right? The banks are a business just like you're a business. Do the banks do crazy, illegal shit? Yes, absolutely. They get sued all the time. Banks definitely get sued all the time, every year, multiple times a year. But they still have the money. And we, as business owners, still need the money so that we can continue to grow and scale. All we have to do is learn the rules of the game so that we can play the game properly, right? Now, in my culture, we got a game called spades. For those that's watching, if you're not of the culture, I'll break it down for you. It's like this. It's one of those things where by the time you're a certain age, like let's say once you're 21, you're a full-blown adult. Either you know how to play spades or you don't know how to play spades. And you're supposed to just learn it as you grow up. You attend the different family functions, aunts and uncles, maybe your mama, a cousin. You're going to sit at the table. You're going to get your ass beat until you finally get good at it, right? No one actually tells you how to play the game. You just kind of figure the shit out because you just keep doing it wrong until everyone yells at you and you get good at it. But no one actually tells you how to play it. Someone might be nice enough to teach you how to play it in like outside of a public setting. But if you're like 35 and you don't know how to play spades, then you just don't know how to play it. And it's just unacceptable to us that you don't know how to play this game at 35. Right? The banking industry is a lot like that. They don't tell you how to play the game. They just want you to go through losing until finally something clicks and you figure it out. Unlike the game of spades, where it's optional because you're doing it for fun. Or you may, you put some money up, right? And then that's when it gets serious. Unlike the game of spades, you can't simply ignore the rules of banking. We can't continue to go the rest of our lives not knowing how to play this game of banking, not knowing how to play this game of credit, not knowing how to play this game of funding, especially as a business owner. It's literally the lifeblood. We need marketing, we need sales, we need funding. Those are the things that we need as business owners, right? All the other stuff, infrastructure, HR, all that is coming along. But if we're a solopreneur like myself, I need sales, marketing, and funding. That's what I need. I need banking relationships. I need to know how to fill out these applications. I need to know which product is going to be best for me where I'm at in my journey. What product is going to be best so that I can continue to grow and expand. Does that make sense? We simply can't ignore the game and act like, oh, I never been good at banking. I never figured out credit, so I'm just not going to sit at the table. No, work with somebody. Get a tutor. Get a tutor. Get a coach. Get a consultant. Watch more YouTube. Read the books, right? Creature on Jekyll Owl, right? Money Mind, The Psychology of Money. Money Mindset. Robert Kiyosaki, right? Cash Flow Quadrant. Right? The 0%. All of these books are about the different ways that money operates in this country. You just have to accept it and figure it out. Or get someone that's going to help you. I did the YouTube thing, I did my YouTube University. I did a year of YouTube University. I fixed my credit just using YouTube and some random books off of Amazon. That's why I also started putting credit repair videos on YouTube. My older videos are about credit repair because that's always going to be your foundation. You're limiting yourself in the amount of capital you can get if you don't fix your personal credit. Like, that's just what it is. You're limiting yourself. It's the foundation. It's so foundational that you can charge other people to use your good credit. Y'all may not know this. I'm gonna put you on a little. This is if you're watching this and you already have good credit, I'm gonna tell you right now how to use that good credit to make you some money. All you have to do is charge people to be a credit partner. That's it. If you know real estate investors, if you know business owners that are looking to get financing, but their credit is too weak, let them know, hey, we can partner up. You can use my credit and I charge 10%, 15%, 20% of whatever they get funded for, because you're doing them the service of helping them get the funding. That makes sense? You can do that with just good credit. And you don't need any type of special licensing or trade or anything to do it at all. This is something you can do just to help other business owners, other investors within your community. And they'll be thankful for it. You help somebody close a deal, and that deal is going to profit them $100,000. They're going to be happy, and they're going to come back, and they're going to see you again. 1,000%. On the flip side, if you're a business owner with bad credit, find somebody with good credit and partner with them. And do right by them. Pay them a percentage. Like all this quick money scamming everybody, like just do right by people. You don't got, you know what I mean? Like, you're going to make more money doing good business with people. That's just how that goes. You're going to make more money doing good business. All right. So, I know we talked about, I was all over the place today, but hopefully those who heard it, y'all caught it. My action takers, you're able to start Googling, looking some of this up, right? If you're looking for some assistance with your funding strategy, whether you're looking for assistance with your funding strategy, you're still confused about how to get access to capital, whether you already started or maybe you started and now you hit a brick wall, reach out. Let's set up a time that we can talk. Book a consultation. Knowledge is power, right? But here's the thing, you gotta take action in order to turn information into knowledge. That's what makes knowledge so powerful. There's a lot of information floating around out here. Lots of information. But it's very little knowledge. And unlike information, you have to pay for a person's knowledge, because this is their life experience. This is the time, the blood, sweat, and tears, the headaches, the sleepless nights that they are now putting together and sharing with you. So yes, it is fair to pay somebody for their knowledge, because information is free. You can Google whatever you want. You can Google how to get funding with bad credit. You can Google that. It's going to pop up. You're going to get all different type of blogs filled with affiliate links to all these different lenders and platforms and this and that. How to build business credit. You're going to get all the information in the world. But it's not until you connect with someone with the knowledge who has gotten people funded who have bad credit. It's not until you connect with someone who has built business credit that they'll be able to tell you those additional nuances that you can't get in a book, right? You can get the surface level, you can get the foundation, but there's too many nuances in the actual doing of the work that just can't be captured in a book. It can't always be captured in a course, because everyone's process is different. All right. So listen, I made it to my destination. Y'all be great. Definitely check me out. Like, subscribe, share this video with others, and check the links in the description for resources and to also book a consultation with me. All right, everyone, have a great one. Talk to you soon. Peace.